Level 1. The Paper Millionaire. You are 42 years old. 10 years ago, you bought a house for $400,000. At the time, it felt terrifying. The mortgage payment looked like a phone number, but you stretched your budget and made it work. Now the housing market has exploded. Your home is worth $1.2 million. Congratulations. On paper, you are officially a millionaire. But there's a problem. You still owe $600,000 on the mortgage. Your retirement account has about $200,000. Your checking account has maybe $8,000. Your net worth technically crossed $1 million, but you can't spend it. Most of your wealth is trapped inside your house. If you sell the house, you still need somewhere to live, which means you'll likely buy another expensive house in the same market. So nothing really changes. Your life looks almost exactly the same as it did before. Except now friends assume you're rich. Your bank account strongly disagrees. Millions of people fall into this category. They look wealthy on paper, but their financial flexibility is limited. They are what economists sometimes call asset rich, but cash poor. Your house is worth a fortune, but the bank still owns half of it. If housing prices fall, their millionaire status disappears overnight. Level 2. The Lifestyle Millionaire. You're 35. You run a successful business. Or maybe you're a consultant, a YouTuber, a real estate agent. Your income is impressive, maybe $250,000 a year, maybe even $400,000. You drive a Porsche. You take vacations in Mykonos. Your apartment overlooks the skyline. From the outside, your life looks incredible. Your Instagram definitely agrees. And technically, you've crossed the $1 million net worth mark. But here's the catch. Your lifestyle expanded just as fast as your income. The car payment is $2,000 a month. The rent is $6,000. Your credit cards carry balances from last year's vacations, the dinners, the clothes, the memberships, the private schools. Every dollar you make already has a job, and that job is maintaining the lifestyle, which means if your income stops, the entire system collapses. The Porsche disappears, the apartment disappears, the vacations disappear. You are wealthy, but you're also fragile. Many celebrities, influencers, athletes, and entrepreneurs live here. The money is real, but the freedom is not. Level 3. The Debt Millionaire. You look rich, very rich. You live in a $2 million house. You drive a $150,000 car. Your watch costs more than most people's rent. Your friends think you made it. Technically, they might be right. Your assets add up to more than $1 million, but there's a small detail most people can't see. The bank owns most of it. The house has a massive mortgage. The car is financed. The credit cards carry 5-figure balances. The lifestyle is built on leverage, which works perfectly, as long as nothing goes wrong. But if income slows down, or the economy weakens, or interest rates rise, the pressure builds fast, because debt multiplies risk. Every payment becomes a deadline. Every bill becomes a reminder. And suddenly, the millionaire lifestyle feels less like success and more like a treadmill. You look wealthy, but the bank is the real millionaire. Level 4. The Retirement Millionaire. You are 50 years old. For the past 25 years, you followed the classic financial advice. Save money, invest consistently. Don't try to outsmart the market. So every month you bought index funds, retirement accounts, 401ks, nothing exciting, nothing flashy, just quiet discipline. You watched friends chase crypto bubbles, day trading schemes, guaranteed investment opportunities. You ignored them. You just kept buying the market, month after month, year after year, decade after decade. And now your portfolio is worth $1.5 million. Congratulations. You are officially a millionaire. But there's a catch. Most of that money lives inside retirement accounts, which means it's technically yours, but not really usable yet. If you withdraw it early, taxes appear, penalties appear. Suddenly, the government becomes your biggest investment partner. You're comfortable, but you're also dependent on the market. If the stock market drops 40% right before retirement, your timeline changes overnight. This type of millionaire is incredibly common. Millions of people quietly arrive here after decades of work. They did everything right, but their financial future is still tied to forces they cannot control. Interest rates, market cycles, global crises. They have wealth, but not complete control. Level 5, the business millionaire. You are 38 years old. You built a company. Maybe it's a logistics firm. Maybe it's a software startup. Maybe it's a chain of restaurants. Your business generates $300,000 in profit every year. Based on industry valuations, your company might be worth $3 million, which means you are technically a multimillionaire. On paper, at least. But the business is also your life. Your phone never stops buzzing. Employees call when something breaks. Customers complain. Suppliers delay shipments. Payroll has to be met every month. Taxes appear out of nowhere. Regulations change. And suddenly you're solving problems at midnight. If you take 2 weeks off, things start slipping. If you disappear for 6 months, the business might collapse. Your wealth exists, but it requires constant attention. You own the business. But the business also owns you. Many entrepreneurs live here, successful, respected, but constantly working to keep the machine running. Level 6, the equity millionaire. This is where things begin to change. Instead of trading time for money, you start owning pieces of systems, stocks, real estate, private businesses, equity. Your wealth is no longer tied directly to your hours. Dividends arrive every quarter. Rent arrives every month. Businesses generate profits even when you're not in the office. This is the stage where wealth becomes scalable. Your money begins working harder than you do. A $2 million portfolio growing at 8% annually produces $160,000 a year. And that growth happens whether you are working or sleeping. This is the transition from income to ownership. But more importantly, it changes how risk works. If one income stream disappears, the others continue. A tenant moves out, but the dividend stocks keep paying. A stock drops, but the rental properties still produce income. Instead of relying on one paycheck, you begin owning a network of assets. And that network slowly becomes stronger every year. This is where financial stability starts to appear. And ownership is where real wealth begins. Level 7, the invisible millionaire. This is the type people almost never notice. They don't look rich. They don't act rich. They drive normal cars. They live in quiet neighborhoods. They rarely talk about money. But behind the scenes, they own assets, lots of them. Apartment buildings, warehouses, manufacturing companies. Small, boring businesses that generate steady cash flow. The type of businesses most people overlook. Car washes, storage facilities, distribution companies, local service businesses. Nothing glamorous, nothing viral on social media, but extremely profitable. These people may have $5 million, or $20 million, or even $50 million. But they rarely appear online. They rarely show off their wealth. They focus on building assets quietly, because the more visible wealth becomes, the more attention it attracts, taxes, competition, and sometimes risk. So the smartest millionaires often stay invisible. Level 8, the system millionaire. At the highest level, millionaires stop thinking about money entirely. They think about systems. Instead of asking, how can I make more money? They ask, how can I build something that prints money? They create structures that generate wealth automatically. Investment funds, licensing businesses, large-scale real estate portfolios, ownership stakes in expanding companies. Their income is not a salary. It is a flow. Money moves through systems they control. And those systems grow every year. For example, a software company that charges monthly subscriptions, a portfolio of apartment buildings across multiple cities, a fund that owns stakes in dozens of growing companies. Once these systems are built, they can continue generating wealth for decades. The founder might retire, move to another country, or spend the afternoon playing golf, and the money still arrives. This is where wealth becomes exponential. Not because they work harder, but because their systems are working for them. So when someone says they're a millionaire, that word alone doesn't tell you much. They could be one mortgage payment away from financial stress, or they could own systems generating income every single day. The word millionaire hides a massive difference between appearance and reality, between income and ownership, between fragile wealth and powerful wealth. Because the real question isn't how much money someone has. The real question is this: how does their money actually work? Is it trapped in a house, dependent on a job, or flowing through systems that keep growing? Most people spend their lives chasing the number. 1 million, 5 million, 10 million. But the number isn't the real goal, because the number alone can disappear. Markets crash, businesses fail, housing bubbles pop. But systems keep producing. Once you understand that difference, you stop chasing the number and start building the system instead.